Before we get started, we need to talk about the reality of living in abject poverty, as well as redefine our developed world idea of what a bank is. In most of the communities where Whole Planet Foundation funds microcredit, there are no jobs and no opportunities for employment. Often, the only option is to create one's own business and source of income. However, traditional banks will not consider giving a loan to people living below the poverty line, let alone to people living on less than $1 or $2 a day. Factor in gender, and the situation is very bleak. Often, people's only option is to take out a loan from a moneylender or loan shark, who will charge them as much as 100 to 200% interest. Even worse, in cases where a borrower cannot repay the loan shark will go after them, their belongings, and their families. There are pro-poor organizations that offer microloans as well as services like health clinics and life insurance. These microfinance organizations travel to the client, interact with them weekly, and are dedicated to their success. The microlending program is designed to help the microcredit client be successful, and the interest rates are imperative. Not to mention, they are much lower than the going rate of a local loan shark. Microloans are a different product than a traditional bank loan. Microfinance organizations operate in a different way and have different services than a traditional bank. Traditional banks can serve many people from one location and use technology like ATMs to bring down transaction costs. Try to think of interest rates as a service fee for all of the labor that the microfinance organization exerts instead of what you would pay on a credit card. Credit card rates are calculated for a 30-year term, while microloan service fees are typically for 6 months to 1 year. Bringing the bank to the people is imperative in giving credit access to individuals living in poverty, and as a result is more expensive. Microcredit field staff often visit their poor clients weekly. This labor-intensive, higher-cost model is necessary to maintain high repayment rates for loans to people living in abject poverty. Interest is needed to cover things like the cost of doing business and inflation in order to make the organization sustainable. By collecting interest, the money the organization can lend grows, and even more people can be helped. Interest empowers people, as their loan is a business transaction and the clients are business people, not recipients of charity. Many microfinance organizations believe that a loan is not enough by itself and offer access to health services along with education and training. Developing world countries typically have higher rates of inflation and are generally less stable. This increases foreign investment risk and raises the cost of capital for everyone, especially the poor. Microfinance organizations must operate sustainably to assure access to credit is available long-term. Microfinance organizations cannot grow funds internally or through commercial capital markets without a profit. Profits are a critical part of sustainability. Microfinance organizations set their interest rates based on the local economy, inflation, number of clients, and financial sustainability of the overall project. Whole Planet Foundation does not set interest rates. However, we do monitor and evaluate all of our partners to make sure that their values are in line with ours, that their interest rates are equitable for the areas in which they work. As you can see, the higher cost for smaller loans require higher interest rates in order to be sustainable. More competition and innovation will generate better opportunities for the poor and drive down the cost of microfinance. Profits are good when used to achieve a higher purpose. These microfinance organizations are conscious capitalism in action. Whole Planet Foundation's mission is to alleviate poverty through the support of entrepreneurship. We analyze all aspects of a potential microfinance partner: their methodology, operational efficiency, interest rates, competition, growth plan, etc. Ultimately, we determine the microfinance organization's ability to effectively utilize Whole Planet Foundation funds to serve the poor while building a sustainable organization. For more information on interest rates and their role in alleviating poverty, please visit wholeplanetfoundation.org.